Welcome back to Block TV. Now, Alex Tapscott is the co-founder of the Blockchain Research Institute, a self-described global independent think tank focusing on the strategic implications of blockchain technology. Alex has also recently published a book about the industry financial services revolution and spreads the blockchain gospel as an evangelist and educator in the space. And he joins us now. Alex, firstly, thanks so much for being with us.
My pleasure.
All right, and joining us also in studio today, as ever, the lovely Orlo Kai, VP at BitTax, to help discuss all things regulation and taxation. Or, thanks so much for being with us.
Thank you.
All right, Alex, so firstly, again, great to have you here. And let's kick off with this book that you recently released, The Financial Services Revolution. Tell us a little bit about what led you to write the book and who it's aimed at in particular.
Well, the reason I decided to write the book is because after doing extensive research on blockchain and cryptocurrencies, I've come to the conclusion that the financial services industry is basically going to be unrecognizable in a matter of years. And that's because for the first time in human history, we have a new digital medium for value that's going to transform not just money, though it will transform money, and we're already seeing that with Bitcoin, but virtually every single kind of asset in the economy and everything that happens inside of the financial services industry. You see, with the first era of the internet, we had a medium for information, which was useful for sending emails and hosting websites and launching products like Wikipedia, but it wasn't very useful for assets, because when you send something using the internet, you're not sending an original, unique thing, you're sending a copy. With blockchain, we can create scarcity in the digital world, and that means we can create assets of virtually every single kind. So the unstoppable force of blockchain is coming up against this immovable object of the financial industry, and I think that the collision that is going to occur from that will be cataclysmic and is going to completely transform companies and create new winners and losers in the economy. And so I wanted to write a book about this to help explain to people the coming changes that were going to happen in this new and exciting decade of transformation. The book is targeted at anybody who cares about understanding the future of the world. Though it is very focused on financial services, it's a compendium of research projects conducted by some of the world's leading thinkers in the industry, people like Michael Casey, who's the director of content for CoinDesk, or Primavera de Filippi, who runs Koala, the biggest legal consortium in the blockchain space, as well as myself. Obviously, I wrote the first chapter and edited the remainder of this book. So it is deep in detail, and I think anybody who's even expert in either finance or blockchain will learn lots of new things. But I do think it's also approachable enough for anybody who's just interested in understanding this and wants to understand the future.
Mm-hmm. Now, Alex, I want to dive a little bit into the meat of some of the points you just raised there. You spoke about digital scarcity as the key to a changing revolution in the way we interact and access the digital world. But I'm going to play devil's advocate for a little bit here on the crypto space and say those from Federal Reserve Chairman Jerome Powell to the Oracle of Omaha himself, Warren Buffett, say that Bitcoin itself and cryptocurrencies as a whole have in and of themselves no inherent value. So therefore, the scarcity of something with no inherent value would in and of itself not be valuable. Now, responding to critics like that of the blockchain and digital asset space, how do you sort of interpret that in terms of the traditional financial lens and the sort of establishment financial lens, which still controls so much of the way that the financial world works?
Well, I'll answer that in two ways. The first way is that this is a paradigm shift. And whenever you have a change in paradigms, leaders of the old often react with hostility, derision, and humor sometimes. They try to fight against it because it represents an existential threat to the way of life and the way of doing business that they've become so accustomed to. Having said that, the opinion from people within the existing financial world and within institutions like government is I think, a bit more mixed and varied than you've characterized it. It's true that Warren Buffett is called Bitcoin rat poison squared, but Jerome Powell has taken a pretty benign approach to the cryptocurrency, and actually just recently announced basically that there was a lot of utility and usefulness in cryptocurrencies, especially privacy currencies, that would allow for anonymity in transactions. The second point regarding the value of Bitcoin, I mean, Bitcoin is money, and money today derives its value from the faith and confidence of the system that creates it. it's been a long time since traditional fiat currencies were based on any specific thing in value, like say the value of a precious metal. The US dollar is based on the faith and confidence we have in their government, their ability to tax their population, and their ability to manage their finances and so forth. Bitcoin also requires an act of faith as well. It's an act of faith in digital scarcity, in the idea of having a immutable record of value that can allow you to transact peer-to-peer around the world in quantities large and small. But of course, that requires an act of faith as well. And I think that there are lots of faith-based systems that can create lots of value. Now, the second aspect of the question that I was referring to is that Bitcoin is one of, I think, dozens of potential use cases for the underlying blockchain. And we're already seeing this play out in the world of crypto assets. In the most recent book, this book, Financial Services Revolution, we outline a taxonomy of crypto assets. It's true that there are currencies that are meant to be a medium of exchange, a store of value, and a unit of account. But there are many other kinds of crypto assets that are not designed to be currencies at all, including things like securities tokens, which are meant to represent the value of some underlying entity. For example, stock in a company, equities in a company, or bonds or other forms of credit. There are stable coins, which are designed to be currencies, but are pegged to some underlying thing that has value, like say gold or fiat currencies. There are natural asset tokens, which are derived from things like carbon or water or air or oil or natural gas. There are utility tokens and platform tokens, things like Ether and Atoms and others that are meant to be the gas that runs distributed operating systems and distributing computing systems. So again, Bitcoin requires an act of faith. I happen to have a lot of faith in it, and I'm a big believer, I'm a big holder. But it's one part of a much larger spectrum of assets that is going to have an impact on every part of the financial industry. So securities tokens are going to impact capital markets, for example. The idea of digital bonds and other forms of loans are going to disrupt credit and traditional banking systems. Stablecoins are going to change how we think about international payments, clearing, and settlement. So every single one of these new kinds of crypto assets represents a big challenge and I think opportunity to different aspects of the financial industry. And we dig into very deep detail in the book looking at each of those.
All right, and now Alex, I mean, you brought up a lot of different potential use cases and spaces out there in which there can be growth in the digital asset space, but I want to bring you into the conversation here and talk about, Alex spoke about that from a technological perspective, from a regulatory perspective. Does that sort of growth and mass development and a myriad of different opportunities really exist and have the potential for such growth?
Well, I personally believe that mass adoption can come only through regulation, and without regulation it will never happen. But I really want to ask you about that, Alex. So you're talking about future mass adoption of crypto and of blockchain and of crypto specifically, but we all have some theories of how is it going to happen, this mass adoption, because we are 11 years since Bitcoin created now, and still there is no mass adoption. So I was thinking maybe it was Libra, Oton, or maybe social media, or maybe through, I don't know, maybe through easier wallets. What is your theory? How will we get to mass adoption?
So I think there are three different areas that represent challenges to mass adoption. So the first is technical infrastructure. So are these digital assets actually able to support the volume of transactions and the utility and use cases that we're describing today? And obviously there are technical challenges to scaling all sorts of different kinds of distributed systems and just different kinds of digital assets. The second area is the underlying business infrastructure, which is how do we make it easy for individuals to own and custody these assets and to use them in different kinds of use cases. So, purchasing and selling securities, using cryptocurrencies to buy goods and services and so forth. And then the third issue is the regulatory infrastructure, which is what you just alluded to. And I actually think that that is the area where the biggest challenges exist today. So take, for example, securities tokens, the idea that you can have native digital assets that represent shares in companies, for example. There is no technical or business obstacle to realizing a vision whereby anyone anywhere in the world can be an owner of capital, and any company anywhere in the world can issue an asset representing equity in their business to a global marketplace. We've already seen that, in fact, play out through the ICO boom and bust from a year and a half, 2 years ago. But the reason that I think we're not seeing it on a widespread level for securities today is that in each individual jurisdiction, in Canada, in Israel, in the United States, in Europe, and so forth, there are different regimes for how securities markets ought to be regulated and governed and so forth. And the burden for small businesses of adhering to those laws makes doing a securities token offering prohibitively expensive and complicated many times. So again, I don't think this is a reason that blockchain won't succeed. I think it's an implementation challenge that needs to be overcome. I think on the technical and on the business side of things, if there is a market for a product or service, if this stuff really is useful, then those issues will be addressed. But on the regulatory side, it's a much more complicated problem.
It certainly is a complicated problem, Alex, and one that you haven't necessarily shied away from, but I want to ask specifically because a recent Blockchain Research Institute report that you guys released came out assuming that by 2030, both the US and China will have their own cryptocurrencies. Bitcoin will be considered the new gold, and corporate cryptocurrencies will be in widespread use. Now, while the Chinese are definitely on their way, perhaps leading the pack in the sense in regards to CBDCs, the US government in its current status isn't exactly crypto friendly, although as you alluded to, you do have some, I guess, more benign statements coming out, more neutral statements coming out from the governmental perspective. How do you think we're going to get to that massive shift in just 10 years?
Well, the future is something not to be predicted, but achieved. And I hope that the work we're doing at the Blockchain Research Institute is helping people to achieve that. Having said that, I do make a lot of predictions, so I'm not going to shy away from your question. It's unclear how exactly this is going to play out, but what I can tell you right now is that the contours of this new revolution are quite clear. And at this point, the genie is out of the bottle. So I see it happening in a couple of ways. Number one is that in China, there's already this big push towards taking cash out of circulation and moving more and more payments into the digital realm. Now, most payments in the digital realm today happen through payment providers, big apps like WeChat, for example, and Alipay. And the government, I think, sees an opportunity to basically not disintermediate those companies, but to create even greater surveillance over what's happening in the economy, where every single transaction between parties can be monitored and vetted by the central authority in Beijing. And I think that's something that ought to worry a lot of people. And so I think that, like many things, when one large global power does something, the other has to play catch up. So even though you are correct that I think today interest in CBDCs is relatively muted within the Federal Reserve and within the government, you're starting to see people on the outside, influential people, trying to agitate for change. So for example, Mark Carney, the former governor of the Bank of England, advocated for a new synthetic global currency that would be made up of local or national digital fiat currencies. And just today, it's February 25th, Christopher Giancarlo, the former head of the CFTC, which is the largest regulator in the United States of commodities and futures, which is a massive market, announced that in an op-ed and in subsequent work that he thinks that the US should do likewise. So I think you're going to see a lot of push coming between those two forces, between the US and China. On the private currency side, I mean, listen, Libra has already been around for almost a year as an idea. It hasn't actually launched yet for the reasons actually that I just described in the last answer, which is that the technology and the business infrastructure exists, but the regulatory issues today are the ones that are actually creating the big sticking points for that project. So even if Libra fails to launch, which I think is a very distinct possibility, it's very likely that projects in China and elsewhere will launch. And they're not going to launch with the permission of the government. They're going to launch with the active support of the government because the government sees it as a way to achieve its political aims. So in that context, again, the US has to really think hard. Do you not want your corporate leaders creating more and more influence for the US dollar globally through the implementation of stable coins backed by the US dollar, or would you rather just shut them down? And I think if Facebook doesn't launch, at this point the cat's out of the bag, and I think you'll see other companies doing likewise. Certainly, if Facebook does launch, I would expect companies like Amazon and others to do their own versions of this for the simple reason that Jeff Bezos doesn't want people spending Libra inside of the Amazon ecosystem. I think that would drive them up the wall. So again, it's all going to happen because there's a market demand for this, or because there's massive push coming from government, and I think you're actually seeing both.
Now, Alex, I agree with your sort of overarching points there regarding the corporate cryptocurrencies world, the speculative aspects of what we're discussing here. So let's bring this conversation back to a point that's immediately current and very relevant, which is again that notion of Bitcoin as a digital gold and a digital safe haven. Now, this question has been put into stark reality, as it were, starkly questioned as we see the sort of coronavirus outbreak and the potential impacts and ramifications that's going to have on the global economy playing out in real time. With just yesterday we saw the fall of the Dow falling over 1,000 points on a single day. Equity markets across the globe are taking big hits, and yet Bitcoin didn't see that daily rise that we would have expected, in contrast to gold, which is now hitting 7-year highs. Now, obviously, this is all but one example on a very short-term time frame, but I just want to drill down into it and ask you, Alex, do you believe that Bitcoin really has the chops now? If we were to go into a coronavirus pumped global crisis, does Bitcoin have the chops to be that sort of digital gold as it stands in the marketplace right now?
I'm not sure, to be honest with you. There are two things that drive the price of Bitcoin. Well, there are a number of things, but in the context of this, number one is that it is a speculative asset. So when speculative assets go up in value, Bitcoin generally tends to do well. Sometimes when speculative assets decline in value, and I don't mean speculative like risky, I mean things like stocks, right? For example, so equities are more risky than bonds or cash in traditional financial language. Then sometimes when we see those decline, Bitcoin sometimes stays flat, sometimes it goes down. So I think at this point that the idea that it's a digital gold in times of global crisis, like a pandemic, are probably overstated. Though I think if you want to look at the price action in Bitcoin over the past few months in the context of what's happening, you do see a couple of very interesting trends emerge. I would say that people in the cryptocurrency community are generally more distrustful of institutions and generally more attuned to potential crises that are happening. Now, sometimes that creates false positives, but in the context of coronavirus, I think actually a lot of them were quite correct that this thing is going to be quite disruptive. So during the entire coronavirus outbreak that's happened since January, the price of Bitcoin has actually done very well. And right as the general market was catching on to this, as you pointed out, reflected in the decline of stock markets around the world, you saw Bitcoin actually start to sell off. So maybe that was a bit of buy the rumor, sell the news, which you see often in markets where people actually buy on the anticipation that it's going to be a safe haven and it actually sells off. But at this point, I think it's unclear. Right now, 40 million odd people own Bitcoin in my home country in Canada. I think it's about 4% of adults. So there's not enough widespread adoption yet to create the conditions where all of a sudden everyone can just go out and buy it and drive the price up and create that safe haven. But I do think it holds many of those properties. And I think the action you've seen in the past couple of weeks is evidence of that, of the fact that at least for some large and vocal online communities of people, it was certainly a safe haven. And I think will continue to be one.
And a potential safe haven there in times of crisis, but there are other facets to this as well in terms of developing that, in terms of the regulatory space and how governments would react should we see the sort of economic downturn that a lot of the sort of more doomsayers are predicting, and there is a flight out of standard equities markets into other positions. I suppose I wonder, and I turn to you or on this one, will governments respond negatively to the increased adoption of cryptocurrencies in that sort of sense as people move away from traditional assets?
Well, you know what? Interesting in what Alex just mentioned of the corona aspects, and it's really interesting to see what governments are going to do. But I do think that maybe, and Alex, I'm interested to know if you can agree with me. So we have mentioned the institutionals, and we know there's not a lot of institutionals now in cryptocurrencies, but because of the coronavirus, probably the institutional now are sitting down and counting their losses and are facing a very instability time in their portfolios. So Is this the right time for the institutionals to finally understand that Bitcoin is opportunity that wars come into?
So I think that every single institutional investor should own Bitcoin, at least, and maybe look at other cryptocurrencies and other crypto assets. And that's just a mathematical reason. The basic premise is that if you add Bitcoin to your portfolio, even in a small amount, not only will your potential return increase, obviously, because it's very volatile, but your risk adjusted return will actually increase, which means basically you can generate more return with less risk. Now, that sounds very counterintuitive considering that Bitcoin is risky, but Bitcoin is what's called an uncorrelated asset. And that's sort of what we were describing earlier, which is that it sometimes moves in tandem with markets, but sometimes it doesn't. And there's no clear data to support one thing or the other. So by adding it, you increase the diversification, which lowers your risk, but you also add the potential for outsized returns. And in the context of a potential global pandemic, where there will be a flight to safety, and I think as gold continues to move higher, it might look less attractive because it's exceeded expectations or people are looking for a different kind of safe haven, then I think you could see Bitcoin begin to succeed. But I don't think that we should overlook all the challenges that I mentioned before, which is that even if that is the case, who is going to step into the market to buy it? I think at this point, the retail adoption and the retail infrastructure is not really sufficient to create sort of a flood of hysteria that you sometimes see in these kinds of scenarios. But I do think, to your point, or that institutions could be the backstop that starts to drive this higher.
Certainly, institutions could be the potential backstop, but I suppose I want to ask as well then, given the US's trepidation to jump headlong into the sort of blockchain and cryptocurrency world, do you think that that lack of leadership in the financial sense will stymie the potential growth in an institutional sense, as we've seen in some cases already of the US regulators being wary and thus keeping certain institutions out of the crypto space?
Yeah, I certainly think that it could. And honestly, I think that the United States is a leader today in blockchain and crypto economics, not because of government support, but in spite of government hostility in a lot of respects. And I'm not saying that government is hostile to the technology, but the fact remains that governments and regulators often lack the resources and the tools and the wherewithal to effectively keep up with evolving times and changing technologies. You know, technology moves exponentially, governments move linearly, and that's fine. But it does mean that in times of change, they do need to catch up and they do need to think seriously about this. And there's precedent for it. So during the 1990s, the internet was emerging as this really interesting tool that people online were using, and the web browser was created and really helped to create the conditions for this to take off. But the rules and regulations around, you know, telecommunications and the transfer of information were based on models from the 50s and 60s. So they needed to change it. And they did that through changes to the Telecommunications Act, which basically allowed for internet service providers and other platforms online to not be held liable for content that other people happen to host. So for example, if you're an internet service provider and someone, you know, used you to upload something that was owned copyright by Disney, you as the ISP were not held liable. And that was a big shift for thinking about how information was moved and transmitted. And as a result, allowed for the internet to really explode in popularity and in influence, and allowed the US to be a leader. So I think we need to think about a new Telecommunications Act for the age of digital assets. And I think that the government can step in if it wants to and be a leader in that regard. Obviously, most of the innovation, most of the job creation, most of the transformation is going to happen by private enterprises doing things. But government can be a facilitator. It can create the conditions for enterprise to succeed more easily. And it can also create the conditions for enterprise to not succeed. And what's interesting about this second era, this era of blockchain, is that in the first era of the internet, so in the 80s and 90s and so on, the US was the dominant technological and economic superpower. Most of the internet connections and personal computers were in the United States. This time it's very, very different, right? Technology is much more distributed. People have access to the internet in more than half of the world. Smartphone technology is nearly ubiquitous in many countries, like in China, where there are 4 or 5 times as many people as in the US, and in other massive markets like India, Indonesia, and elsewhere. And so I think that if you as a country say you're not open to business in this area, it's very likely that companies and talent and capital are just going to flow elsewhere. And as a result, it could be a massive missed opportunity for countries that have led in the past, like say the US, to not lead into the future. And we might see the balance, the nexus of power in technology begin to shift. Now, I don't think it's going to move from one pole in the US to another pole in China. It just might become more distributed. And that's going to create conditions that are hard to predict, quite honestly. So we'll see.
There's certainly important questions raised there about how the future is going to look in terms of a perhaps distributed information and financial world, not just keeping that technology for our ledgers. Alex, Tapscott, I want to thank you so much for taking the time to speak with us today on this range of important topics on what the space faces, how it'll grow and how it'll develop. We really thank you for taking the time to be with us. Olokai as well, thank you so much for joining us here today. And for those watching at home, stay with us at blocktv.com for all the latest in news and information. I'm Westropp-Evans. Thanks for watching.
For more news and updates, follow us on Twitter.